Good afternoon, traders from around the world. Today, I kind of want to talk about exploiting your edge in the financial markets. I believe that whenever you enter the financial space, you have to sort of kind of like have an edge in the markets that you can exploit. An edge. What do I mean by an edge? Let me show you this. I'm actually going to show you something about knowing how to knowing how to actually have knowledge about your edge and then knowing how to exploit your edge. Okay, let me kind of show you something. Exploiting your 60% hit rate in the financial markets, you should at least have a 60% hit rate edge in the financial markets. I believe that every trader needs to think like a casino in the trading business and have an edge in the game. An edge is having a trading system or strategy that has at least 50% or preferably 60% win rate. When buying a course, you need to know the probability rate of the strategy and backtest it yourself to gain assurance of it, because you need to really know the win rates and the lose rates of your strategy so you can so you can optimize wherever it's needed, wherever it's necessary. So when backtesting, you use in simple and out of simple data testing method to help mitigate curve fitting rules, which is a common mistake in novice traders, obviously. Backtest one instrument at a time on at least 100 trades or more. Some people prefer backtesting 200 trades. As you know, the law of large numbers suggests that we need to backtest at least like more than 100 trades. So this was a method that was used by uh, that were used by traders that used to trade a long time ago, before we even knew that trading was a thing. So this is a method that was used by Jim Simons. Let's kind of research who Jim Simons is. Jim Simons. So this is the James Harry Simons is an American mathematician. He was a mathematician, and he actually worked at MIT firstly, and a lot of stuff happened there, and he thought of a way of actually making money on his own and being self-dependent, and then he started a hedge fund management, and he's actually one of the traders that used technical analysis in his hedge fund management. So this is what they really used. They exploit it. He believed that in trading there are actually patterns, there's actually a structure, and whenever there's structure, there's actually some sort of statistical edge that you can use to your advantage. So you need to really know what your statistical edge is in the foreign exchange or whatever stock markets, cryptocurrency, whatever market you actually engage yourself in. So I actually want to show you something. You need to use different periods for each data testing, and this is gold. You need to use 100 trades data on gold if ever you're gonna backtest gold on whatever system that you buy or whatever system that you're gonna use in the financial space. So this is in simple data testing. You need to test at least 70%. 70% of the data needs to be in simple data testing. And then you need to, if ever you're going to have 100 trades, 70% of 100 is actually going to be 70 trades. So you're going to have to backtest 70 trades in simple data testing. And this is really simple, guys. In simple and out of simple is actually the same thing, but the only difference is the periods. This you're going to use it on January up until August 2019. And the next coming 30 trades, you're going to backtest them on January up until April 2020. This is because you need to, this is actually for further validation that um, the first in simple data that you backtested wasn't actually manipulated by Bex or anything like that. So there wasn't any curve fitting that you did with your strategy. So you're actually going to backtest the next following year, the next coming trades, 30% of the trades, you're actually going to backtest them the next following years, starting from January or whatever month you actually want to start backtesting it on. But it has to be a different time from the first in simple data. So this is really simple, guys. You can actually look how to do this on the internet or YouTube. You can actually type in simple and out of simple data testing. And after you've tested your strategy, you're gonna get a win rate and you're gonna get a lose rate, which equates to a probability rate. You're gonna get a probability. How many times are you gonna win when you place a trade? So if if you get a win rate of 60% hit rate edge and a lose rate of 40%, this all equates to 100%. Every time you place a trade, you're going to win 60% of the time, and every time you place a trade, you're going to lose 40% of the time. So how does this actually work? How does the mathematics and the statistics data is exploited in the financial space? I use a system called the break and retest system. It has an edge of 60% in the long run. So 60% of the time I place a trade, I'm going to win. 40% of the time I'm going to lose, because everyone is going to lose in the financial markets. Eventually, everyone loses in the financial markets. So what's really going to happen here? If ever I use my strategy, my main setup, which is the break and retest trading strategy, and if ever I use confluence, which is extra confirmation, this is extra confirmation that my setup is actually likely to happen, as opposed to not actually going into my direction. So I'm going to use a Fibonacci, and then I'm going to use a trend line bounce, and I'm actually going to show you a trade I took this week. And this week was a very nice week. Our percentage gain was up, I think, 90%, but this is not what we're going to count. So I actually use a Fibonacci retracement, and I actually use a trend line bounce. So, and then we come to risk management. You need to know how to manage risk. So you need to have, every time you place a trade, whenever you're going to backtest your strategy, you need to have a risk to reward of 1:3 or more. You need to at least take a risk to reward of 1:3 or more, nothing less than that. And then your percentage risk, you need to risk at least 1:5%. Every time you're going to place a trade, you're actually going to lose 1 to 5% of your trading account. If ever you have 100,000 account, you're actually going to lose. And if you risk 1%, you're actually going to lose 1,000. If you risk 5%, which is the maximum risk that you can use, you're actually going to lose 5,000 rands. And you need to have a hit rate. You need to know your hit rate. So I told you how you know your hit rate, how you actually gonna get your hit rate, just by actually back testing. And after back testing, you're gonna get a win rate, and then you take your win rate, and then my system has a 60% win rate. So I'm actually gonna teach you how this works. So you guys, so the reward, every time I place a trade and I risk 3%, I like to risk like 2 to 5%, not 1%. But some people really prefer risking lower than that. So I'm actually gonna risk 3%, and if I win 60% of the time, I'm gonna gain a percentage in the long run. I'm actually gonna gain a percentage of 180%. What is the long run? The long run is at least like a year. If I trade and I take like more than 100 trades a year, I'm actually gonna gain 180% in the long run. And if I place a trade and I lose, I'm actually gonna risk 1% per trade. No, I'm not gonna risk 3% per trade. This is my risk to reward. I'm actually going to risk 1% per trade, and I'm going to lose 40% of the time. And this is my risk to reward. If I get a risk to reward of 1 is to 3%, every time I place a trade, I have to get a risk to reward of 1 is to 3%. And if I combine it with my win rates, it's going to give me 180% in the long run. And if I lose, I'm going to lose 40% in the long run. So 180 minus 40%, and this is the percentage gain that I'll have in the long run. So after maybe like I place 100 trades, and this is probably going to be like after 1 year. And if I've invested like 20,000 rands, and I had a gain, and I took I'm up like 140% after, in the long run, after like a year, I'm up like 140%, because this is going to be my percentage gain in the long run. I'm actually going to make 28% of my account, and I'm not 20%, 28,000 of my account, and then I plus that with my deposited account, which is my actual account, and I'm actually gonna make 48,000 in the long run. And this is what I wanna show you about. This is actually what I wanna show you about my strategy, and how this strategy, it actually has an edge of 60% in the long run. And I'm not selling you guys a course here. I actually want to show you how this works. I'm actually teaching you to be aware that every time when you buy a strategy, or when you learn a trading strategy, you need to backtest and actually know your statistical data and exploit your edge in the markets. This is my strategy. This is what I use. The market is going to go up, it's going to come down. It's going to break my highs to tell me that prices is in an uptrend. And then when price is in the uptrend, I'm looking to buy. Since price broke out of here, I'm gonna wait for price to come back to my. This was my resistance, and now it broke. I'm gonna wait for price to come back and test. It's a newfound level of support. It's now gonna be 10 support. Not every time. 60% of the time this happens. So that's why my edge is 60%. If this happens, this is a higher high and it broke, it created a higher high, and I'm looking for this zone to be a higher high. And this is only my main strategy without extra confluence, without extra confirmation. If ever I see something like this, I'm actually gonna use my trend line to actually see if I have a trend line and my Fibonacci to actually see if I have extra confirmation. But typically, if I'm gonna get my rejection or my confirmations here, my my candlestick confirmations here, I'm actually gonna be looking to buy here, and these are gonna be my targets. Sometimes if I have targets higher, I'm actually gonna target higher, but at least I should have like at least 1 is to 3%, and this is 3%. This is 3% of my account, and I'm actually gonna take a trade here, and 60% of the time I'm gonna win, and 40% of the time I'm gonna lose. And if I actually add extra confluence, this is what's gonna happen. Let me take off the Fibonacci. So number one, this is a high probability trade. If I see something like this is a high probability trade. I actually need my main key zone, my main strategy, a high and a break, and price to come back and retest. And I'm actually going to look for more confirmation on a trend line. I'm actually going to have a trend line from data from long ago, and it's actually going to connect me to a trend line here. I'm actually going to show you on real markets on a trade that I took this past week. I'm actually going to look for price to get here, and when price gets here, I'm actually going to be looking to take a trade, and I'm actually going to use my Fibonacci to actually get more confirmation. I'm going to take my Fibonacci from this low to this high, and then price is going to come to a 60% Fibonacci retracement. And then second, I have a Fibonacci retracement, and then third, I have a trend line bounce. And this is a trade that I'm likely to take. This is a beautiful trade. I love this kind of setup. Every time I place a trade, I love to place trades on a setup that looks like this. This is a perfect setup for me. So I'm gonna show you. I'm kind of gonna show you guys on the trade I took this week, this past week, on CAD JPY. So this was before I took the trade. This here, I had a resistance level. Never mind this level here, because this is the zone that they're looking for. I had a resistance here, and I was looking for price to break this resistance and come back here to test this resistance and send it to a new level of support. I'm actually looking for price to give me rejections here for me to take a decision here if ever I'm gonna buy or not. So I had a trend line, I had a horizontal level, which is my main strategy. 60% of the time I take trade like this, I'm actually gonna win. And let me analyze this for you fast. Let me analyze this for you fast. I'm actually looking for CAD JPY, and this is CAD JPY here. I'm actually gonna show you a trade I took this week. Yeah, let me analyze this fast for you. And this is a daily time frame. You know, every time I analyze, I start on the daily time frame. So this was my highs. You know, I started my highs horizontal ray. The move that I caught. Let me show you the move I caught first for me to know. Let me take this off. The move that I caught. This is the move that I caught. This whole move. This whole move was a move I caught this week, and it hit my take profits. Since I'm a swing trader, this was where I'm looking to take profits. So I'm actually gonna show you how, and it's a 1 to 3 risk reward ratio trade that I took. I'm actually gonna show you how I took this trade. So I start on the daily time frame. Bear in mind that this whole data wasn't necessarily there. This whole data wasn't there. Yeah, that's these two daily candles were there, and these were what made my trades to be successful. I start on the daily time frame. I mark up my highs and my lows. So this was my low, and price is actually bear in mind that price is actually going up. Price was actually moving to the upside. I had a trend line. Let me make this trend to be a bit thin. I had this here, this trade, and I start on the low, 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 low. Every time you put your trend down, you start on the low. I had this here, this whole move here. I had like a trend line here. I never really paid much attention to this trend line because like so let's take it off because like it's a very long term trend line. So this was a trend line I paid much attention to and I had these highs here. Let me mark these here. I had these highs. This was where I was looking to take profits. So let's go to the daily time frame and see what we had. I had a trend line and bear in mind that this whole move wasn't there. I had this level here from here because this was resistance, and I'm looking for price to break this resistance and come back and test as a new level of support. And price broke, this whole move broke, and price came back to this level. And when price came back to this level on a lower time frame, I think I had a bullish engulfing and pin bar rejections, and then I entered here. I had my stops below, like I showed you. That was what I had. So I entered there, I had my stops below, and then I had my targets to the upside, like very, very high to the upside. And I had a fairly decent risk to reward ratio. And let me show you the Fibonacci that I actually used. That's Fibonacci from here to here. Okay, let me kind of show you what happened. This is what happened. My trade, let me show you when I took profits. This was when I took profits. This was before I entered the trade, and this is what happened. This was when I took profits here. Okay, let me just take these off here. And this is what happened. Boom, price went into my direction, and I had a risk to reward ratio of 1 is to 5%. And I actually made close to 5.5%. And I made a fairly decent risk to reward ratio. So, guys, this video was actually aimed at uh, at giving you the right knowledge for you to exploit your edge in the financial markets. I'm actually going to post more content about things like this, risk management, because these are simple things that you guys need to understand. These are simple things that you guys need to exploit in the foreign exchange market or whatever market you actually engage yourself in. And so, yeah, guys, I'm actually looking for you guys to subscribe and follow me on my look. You can actually, I'm actually gonna post a link tree down below here on my YouTube channel, and I'm actually need you guys to subscribe for more content like this because this is valuable content. Because guys, the only thing that differentiates me from a lot of traders is because the only thing that differentiates me from a lot of traders is because I'm still a rookie trader, and I believe that it's easier for a rookie trader to explain to, okay, let me just use the term novice trader. It's easier for a novice trader to actually explain something difficult or whatever we're actually all engaging in. It's actually easier for a novice person to actually explain to novice people as opposed to because a teacher will provide you with the right knowledge, but a novice trader will actually help you to understand because like they know the struggles and the challenges you actually went through. So I believe that it's actually helpful for you to actually be taught by a novice trader and a real trader. So whatever strategy, whatever concept, trading concept that you actually use, you should actually come back to my channel. Or if you actually want to use my strategy, you can actually DM me, and I'm actually going to give you the right knowledge because I believe that knowledge is free, and I'm actually going to give you free knowledge on what I actually do because I think I'm gonna create a course soon, and I'm actually gonna teach people for free. I believe that education is free, and you're actually gonna have to put in the work yourself because I can't put in the work. I might put you at the door, but I can't tell you to actually get in. I might take you to you might take a horse to a well, but you might not force it to drink the water or whatever that saying is. But yeah, you guys know what I'm saying. So please, guys, follow me, like, and subscribe. And yeah, man, I love you guys and happy trading the next coming week. Peace out.